Hey folks, Bob Desmond here over at the Contrarian Trader, and welcome to Best Stock Charts for the new trading week. We're going to be talking about the symbols that we like: Texas Roadhouse, symbol TXRH, Scott's Miracle Grow, symbol SMG, Palo Alto Networks, PANW, Qualcomm, QCOM, and Coinbase, symbol COIN. So before we get into it, members, I've already posted the week ahead commentary that is in the members area. The price target, entry points, and stop loss points for these trades will be posted in the members area. So please go check them out. And if you're not currently a member, link below. We have a 14-day free trial offer. So of course you are welcome. We have an excellent Slack channel with some outstanding members that are in that community, and they make it great. So please sign up for our 14-day free trial offer. So let's talk about the market last week. The market came under pressure on Wednesday, Thursday, Friday. Is this the ultimate crash that we've been kind of expecting over the course of the past year and a half with the yield curve steepening? We don't know yet. You know, the yield curve was flat last week. Equities were down, but on declining down volume, at least for the S&P 500 and the Russell 2000, I believe. We did go into the week short, so we had a very good week last week. We profited from the short side, and we remained short. I did book some profits on Friday because I was concerned about how oversold we were on a 15-minute time frame, and even if you look at a 30-minute chart, you'll see that we're pretty oversold. So they may drop the market on Monday morning. I wouldn't be the least bit surprised, but I think that we're going to get a bounce on Monday or Tuesday. And then we'll be looking for how the market holds up. How is sentiment? Do we want to put money to work to the long side, or might this just be a dead cat bounce? And we should really still think about sticking to the short side. So we don't know yet. We don't pretend to know it. The market's going to tell us the direction it wants to go. And we're going to get our first clue tomorrow night, Sunday night, at 6 p.m. Eastern Standard Time when we go live, when the futures market's open. So please join us. If you're not on one of our email lists, we have a 5-part video tutorial of my top 5 favorite candlestick patterns. You'll enter your email address. You'll get those 5 video series. And you'll also get notified 45 minutes before we go live. So please take a moment, hit the pause button, and go down and opt in for that 5-part video tutorial. So let's begin with the symbols that we like going into the new trading week. And again, Coinbase is really at the forefront of those stocks that I like. And the reason why I like it so much is that it showed relative strength on Friday. And in fact, this is a weekly chart. You can see it showed relative strength by and large the entire week. Now, what does that mean? It means is that it outperformed the S&P 500. It outperformed the mid-cap index. So the price action here on Coinbase is more influenced by the correlation to Bitcoin, which has been on a tear of late. So if that move higher on Bitcoin continues, well, that's going to be wind at the back of Coinbase. So that's why I like Coinbase from a macro view. From a technical view, we'll begin to talk about that now. We're going to be using our sponsor, TrendSpider, Automated Technical Analysis, and you'll see why it's called Automated Technical Analysis in a moment, because all you do is click buttons and magical things happen on these charts. So even if you're an experienced trader like I do, I still draw my own manual lines. But what I like to do is I also like to click on the automated trend lines like this, and to see, am I accurate? Perhaps I missed a support or resistance level. It keeps me on my game. And if you're a newbie to trading, well, this is for you. I mean, you can't get more of a handheld walkthrough technical analysis than this product here. So 35% discount code below. I'll show you all the functionality here in a moment. And let's begin with Coinbase. So Coinbase broke out last week. As you can see here, the automated trend line in red is now in the rearview mirror. We broke out and closed there, which is the most important thing. What I'm going to be looking for this coming week is a retest of that support level in red. I want to see a pullback on Coinbase. Ideally, a ruthless pullback, and we'll see how it holds up. What many times you'll see is after a breakout, you can have an extreme pullback, especially in a weak market, all the way back down to what was a prior support level. Now, if these shares close back above this resistance level in red, it's going to be game on to the long side. So on a weekly time frame, Coinbase looking really rock solid, and we will have resistance up here at around 283 per share, and we close out the session at 257.79. So we have a lot of upside potential here on Coinbase. Now, looking at it from a daily chart, the daily chart, we had a very strong bullish candlestick on Friday on good volume. And this is on a down day in the market. So we love that. That's the market sending us a signal that this is a healthy stock. And there are buyers out there willing to step in despite the weakness in the market to bid the shares up. So can we buy these shares right here, right now? Yeah, but you're not doing the proper way of accumulating a position. You'd be buying right at a resistance level as noted in green. We don't want to do that. That's a bad behavior. I want to either A, buy on a breakout and a retest, or B, on a pullback, as I mentioned earlier, on that weekly chart. So Coinbase looking very strong here. Again, reminder members, we will be going over the entry points, stop loss points, and price targets for Coinbase and all these names. They will be published in the members area. I'm going to save my favorite chart for last, so stick around, please. The next chart up is not one that I'm necessarily in love with, and that is Qualcomm. So the trade here is not a continuation breakout trade. The trade here is a dead cat bounce. The semi sector was down almost 10% last week, and it's probably not done going down. So the shot here is to identify where we have a fairly good support level on Qualcomm and wait very, very patiently and enter cautiously, wait for the bounce to occur, and get out at a resistance level. So let's talk about where we might be getting long of Qualcomm. Let's first do this. Let's go to the weekly chart to get a vibe for the 10,000-foot view of the battlefield, how this thing closed out last week, and it was no bueno. I mean, this is a double top. Not only is it a double top, we broke through. I drew the support level several weeks ago. We broke through support. So we have a confirmation breakdown on Qualcomm. So what does that mean? It means that you can't buy this stock and hold it right now. You could if it's going to be a hold for several years. But why? Why buy it here now? You're going to probably get it at lower prices. Would I short it here based upon the price action of last week? Not on Monday morning. Not unless, of course, they rally it up and into one of these three resistance levels, 2 in white, 1 in red. Because we only want to short into resistance. We don't want to short after a nasty sell-off, because where you'd be shorting is probably right into a support level. Technically, we broke down below that support level. It doesn't mean we can't gap up on Monday. So the weekly chart is not looking good here. On Qualcomm, we'll probably pop this coming week. That's our play. That's what we're looking to trade. So let's take a look now. Let's take off the drawings. Let's bring up a couple of things. Heat map, and let's bring up our automated trend lines, both weekly, very consistent with the one I drew earlier on the daily chart. And you can see that in blue, the value of the automated technical analysis, it just popped up the lower band of rising support. So I do think that we are going to test this support level. We closed just shy of it. So it's pretty much a foregone conclusion that we will test. The question is, do we break? I think that we will bounce, but can it hold? Daily view. Now, in a daily time frame, you can see that we have a head and shoulders setup. Left shoulder, head, right shoulder. The neckline broken. Rear view mirror stuff. Now, you can see that the heat map is picking off support level last seen back here in May. So that pretty much coincides. What we could do here is on the daily chart overlay weekly trend lines, and you can see we are right there. So if we overshoot to the downside this coming week, down and into this heat map range, I would be a buyer, because I would expect that you're going to get buyers coming in an effort to try to recapture this support level, this weekly support level. So I'm kind of liking this setup. I may be in this stock sooner than I thought prior to doing the analysis. So Qualcomm looking very good. Let's take a look at seasonality. Seasonality for the month of July is usually very, very good for Qualcomm. August is good as well. We really drop off in September, but the time to buy Qualcomm as a intermediate term swing trade is in September. Why? September is usually a poor month to own the stock, but then you go into October and November, which are very, very favorable months for Qualcomm. So we may only do a short-term scalp on Qualcomm this week, but longer term, we're going to keep this on our watch list to take advantage of a potential seasonality play as we go into the fall. And as a reminder, again, members, in the members area, I have my price targets, entry points, and stop loss points for all of these names, including Qualcomm. The next chart up that we're going to talk about is SMG. So with SMG, we're going to do like we did with the other charts. We're going to begin higher level. We want to see where we are in a macro view. Not on a daily view, not on an intraday view. Where are we macro? And you can see that for quite a while, SMG was in a bear market. But that all came to an end here. We stopped going down. October of 2022. And we have since gone into a very, very long-term consolidation. Now, I love the setup here because as the saying goes, the longer the consolidation, the greater the validation of any breakout. So this looks really, really good to me. Again, another stock that was up last week and including on Friday with a market that was under pressure. Remember, the markets, even though some closed up, some indexes closed up, they closed well off their highs. Look at Scott's. So a little bit of selling, but closed fairly good and was able to break out. We like that. You also have an inverted head and shoulders setup, left shoulder, head, right shoulder, and guess what? We're beginning, once we get through this pivot point here at 77.68, that's going to be the breakthrough of the neckline of SMG, or if you will, the pivot point. So SMG weekly chart is looking good from a higher low, higher high perspective. Now, what else do we like here? There's something else going on here. The reason why I found SMG was because I ran a scan on TrendSpider, and you could see that this is a noisy chart. I get it. The however is that it has value. I ran a scan, and I wanted it to show me stocks that were trading on a weekly time frame with Bollinger Bands within the Keltner channels. SMG appeared. So you have the Bollinger Bands in black and the Keltner channels in green. What does that mean to you? What that means is that there's a tremendous amount of pressure building up on this stock because there's a tug of war at this point in time between bulls and bears. Neither one is moving the stock higher. But remember, going back to that other chart here, we have been in a consolidation for about 3 years now. So the probability of a breakout to the upside far more outweighs the probability of a breakdown. So I'm very bullish on SMG. And you can see again here on this chart, we broke out on a weekly time frame. Now, moving on to a daily time frame, we broke out on the 16th. No retest yet. Nice move up higher, a pullback, and we may not get it. What I'm looking at here, ideally we would have pulled back to the support level. Didn't happen. So we may have to settle with this higher low. It all depends upon the health of the market. If the market's weak, I'm not gonna trade the stock until I get a pullback and a retest of support. Let's check out trend lines. See what obstacles are in our crystal ball. So you can see a lot of trend lines down below, and we're trading above it. That's exactly where you want to be if you're a bull. Now, in terms of a weekly resistance level, on top of the daily chart, you can see here that we have resistance right up here in dashed lines. So on a daily chart, the dashed lines are the overlay of the different time frames. So in this case, the weekly chart is in dashed line. The solid lines reflect the daily support levels. Let's take a look out of curiosity at the monthly resistance levels, and you have resistance up here, but that's at about 75 bucks a share. So while we do have some overhead supply above, I think that the path of least resistance remains higher on SMG. So I'm going to lay out a plan for entry on SMG given current market conditions. You know, with that, it looks like a little bit of the froth came off of this market, and so did a lot of the speculative fervor of traders. So I want to see how this stock moves into the new trading week. Does it pull back and then follow through, or does the market recover next week? This thing just goes parabolic up and into resistance levels like it did last week, only to get rejected. We will not chase the stock. We will not do that. So that's a foregone conclusion. So I'll be calculating out where I want to get involved with this. Again, it'll be posted in the members area along with price targets and stop loss points. Now looking at seasonality on SMG, this is a pretty good time to buy the stock. I mean, July is not a great month. June is the worst month. And for the next several months, generally, it's seasonally favorable as you go out and into even January of 2025. It doesn't appear as though you want to be an owner in February. So the seasonal aspect of the trade is very, very favorable as well, along with the technicals. So SMG looking very, very good as we move into the new trading week. Now, the next chart up is going to be Palo Alto Networks. Now, Palo Alto Networks is number 2 behind CrowdStrike in the security arena, cybersecurity arena. Now, CrowdStrike, they made a big mistake. They didn't roll out an update. They just updated everybody at the same time rather than testing the update and seeing whether or not there were any glitches. So Palo Alto Networks should be a beneficiary of this. In fact, Elon Musk canceled CrowdStrike, so he's going to have to go to somebody else, and he's not going to be the only one. So Palo Alto Networks stands to be one of the beneficiaries of the CrowdStrike debacles. Now, on Friday, we closed up. It's a red candlestick because we closed lower than where we opened up, but we closed up relative to CrowdStrike, which got annihilated. The problem here is that we were consolidating and then we broke support. So I'm not a buyer right here, right now. I want to be a buyer. In fact, I want to go to the weekly chart first. I'm glad I did, because the weekly chart is showing me, I created this line. It's showing me a support level where we closed. Maybe we closed just below it. We'll see where we open up. But there is support right where we closed on the day. Be that as it may, if we fail to hold this, I want to be looking around between, on a weekly chart, 311.66, and on a daily chart, about the same. So I think that ultimately, despite the fact that Palo Alto Networks is catching a bid off the CrowdStrike news, I think that ultimately it's going to get resolved to the downside because this is a pretty sloppy chart. I would be a buyer for a dead cat bounce off of that support level below. Now, in terms of seasonality, July is usually a very good month, and August competes for one of the better months out of the year, with January and February being the best months. So August is a very favorable month. So I think that we're going to get a little bit more pain here than just what we saw last week. So we know our price targets. We know where we want to get long here. So I'll post them in the members area along with price targets and stop loss points. And as you can see here, we have monthly resistance all the way up here. Weekly resistance all the way up here, and support all the way down here. So we're dealing mostly with our daily support and resistance levels at this point in time. So one of my favorites going into the new trading week is Texas Roadhouse. And let's go back to the daily chart with the Bollinger Band squeeze setting up here. This is how I found Texas Roadhouse. using the market scanner on TrendSpider, and you can see how tight these Bollinger Bands are. So a lot of pressure getting built up. So it looks good on a daily chart. The question is, how do we look on a weekly chart? Do we have resistance above? So let's take a peek at that, because we do not. We do not want to go buying into a resistance level. So let's take a peek. So looking at the chart here, we have, they've tried to take it down. It was rejected. They tried to break it out. It was rejected. That leads me to conclude that we have some resistance above. We are in a wedge formation. Let's throw up here on a weekly chart, weekly resistance, and there you have it. So that kind of keeps me at bay, at current on Texas Roadhouse, because we have that overhead supply. I couldn't buy into that resistance level. Let's take a look at monthly resistance. You have support, but no resistance on a monthly time frame. So honestly, the other trade that could be setting up here, honestly, is a potential short of Texas Roadhouse. Now, how would that pan out? Well, the way it would pan out is that when these stocks appear on the squeeze scanner, it doesn't necessarily mean that they're long bets. They can go the opposite direction. So what I'm looking at here in Texas Roadhouse is that, let's clean this up a bit. Okay, is that we broke down here the week of July the 1st. We've been holding support. We did a back test of prior support, was rejected. I think that this is probably going to break support. So I'm thinking that Texas Roadhouse is probably going to break, and that we're probably going to be shorting the shares of this stock. They do have earnings coming up, so I will not be shorting the stock into earnings. So just beware of that. Let's take a look at seasonality. We're heading into a very seasonally favorable period of time, meaning that the trend will be up, but that does not mean that you're not going to have your peaks and troughs. I mean, July is historically up, going back 20 years, only 45% of the time. August, only 47% of the time. In September, it's about 50-50. So this could easily break south. But where I would want to be a buyer is at the lows of September and enjoy the rally through October, December, all the way into March, April. I mean, this is going to be setting up for a great, great long bet in the coming months. But short term, I think that we've come a long way. And in all probability, going back to the weekly chart, this is going to get resolved down due to all of this overhead supply. Now, looking at the daily chart, it still looks pretty healthy. I would not short it on Monday morning. I would not short it before earnings. But if we break these support levels, I will be in there shorting the shares of Texas Roadhouse, because it's probably going to be a volatile sell-off. And how do I know that? Simple. Because you have a major tug of war between bulls and bears going on here, as measured by the Bollinger Bands, a very tight squeeze. So would I be surprised if this gets resolved up? No, but I won't be a buyer, because unless we close above weekly resistance, I can't buy it here. I can't do it. I would revisit it if we closed above this upper band of resistance in green or in blue or red. I would revisit it then, not until then. Otherwise, right now, I have the vibe that this is probably going to get resolved down. And that's it, folks. Don't forget, we're going live, Sunday Night Futures Live, 6 p.m. Eastern Standard Time tomorrow, 6 p.m. Eastern Standard Time Sunday. And don't forget about our 14-day free trial offer. If you're not ready yet, that's fine. Join us on the live stream. Get to know me. I know you. You can do stock chart requests. And don't forget about TrendSpider. 35% discount code below. I think I've demonstrated it's got amazing functionality. So if you're not using TrendSpider, it's like being an archer with an arrow in your quiver. Don't do it. Have it in your quiver. Everybody have an awesome remainder of your weekend. I'll talk to you soon. Have a profitable trading week. Members, don't forget, check the members area for price targets, stop points, and entry points. Talk to you soon. Be well.